Hello everyone, this is Juan Sarmiento and today is Friday, August the 4th. Despite of the recent pullback, the market is reacting very well. Look at the charts here and you will remember my channel analysis. We never touched the upper channel. In addition to that, we have these two lines which represent the most recent highs. Market really high, so we can show them to you in detail on the weekly chart. You have this lower high and the highest ever high. I made it into a thick red line so you know that that is my target. That is where I expect the market to go in short term. Okay, let's say a couple of weeks, 3 weeks, 4 weeks, a month, somewhere like that. We're getting very close. What happens after that? Well, it all depends on how quickly the market goes up. And right now it looks like overbought, meaning if we have it in the stochastics is way over here. It's been there for a long time in the upper end. And so for the market to really go strongly enough to break through those resistances, or you can call it like a glass ceiling if you want, those ceilings need to be broken in a very definitive way for the market to continue to new highs. Otherwise, we may be forming a double top, which would be very negative. Okay, the market goes to that end and then pulls back, and then it would challenge this previous low. Okay, so I don't really care because this is a long-term investment. Perhaps when the market reached us, we can begin to sell cover calls against the shares we have, and because we already have over 100 shares. I have not made that decision. I don't think it would be what I wanted to demonstrate, a simple way to be in the stock market without putting too much money, but putting it in an effective way every week a little bit. So what I have been doing is buying one share of the SPY once a week. Look at those marks, make them into your own chart, draw the channel and put the Ichimoku cloud so you can have a good feeling for whether we are in a bull market or in a bear market, or we are in a iffy market that could reverse at any time, and what happens when we are more decisively through these limits that we have in the market. Would that mean that the market will go much higher? Well, right now it looks overbought a little bit, but you're still not quite there yet. Okay, we could put a circle here so you have more clearly what I'm talking about. My target is somewhere here. Okay, that's where I believe the market will go to before pulling back. The pullback could be back to the lower end of the channel and then back up again more strongly. Okay, but for now it looks comfortably in that direction. Okay, now let's go and enter our trade for the week. I see that I have $452, and that gives me enough cash to pay for a new share. I don't really need to add anymore, but I've been adding $500 every week, and right now we have enough to buy one more. So let's go to the monitor tab, account statement. Let's go to the analyze tab, and here we can just show, say, add simulated trades on the SPY, and just click on the ask, and it shows me 100 shares. I'm gonna add just one, and that will take me to the 114th share. Okay, confirm and send, and we wait until it gets filled. In the meantime, look at this. We have all these options associated with, now we have 114. Look at my average price is 421. Okay, so I can sell a cover call. Usually a cover call will be something like between 28 and 35. I'm gonna choose a 35. Okay, look for the option with the least intrinsic and the most extrinsic value. 7, 491. I click on the bid here and look at what happens. I could get as much as $491 without mattering, without caring whether the stock goes up or down. That's the cover. That's the cover call. And I suggest you follow me in my series on the cover call, because this is exactly what I would do now. And you can see that it is flat here, but not too flat, because we have an additional 14 shares that are not locked by the cover call. So what that means is, if this call gets assigned, it takes away 100 of my shares, and I didn't want that. Okay, so I'm not going to do that now. At some point, perhaps I feel the market will pull back strongly. I could do that, and that saves me a little bit of the money that I have invested, but not a lot, because I will get $700 and I have invested $51,000, so it's not going to save me too much money. But it's not going to take all of it either, so a pullback is going to be, and particularly if it's sideways, you can keep on doing this once a month and you get $792 as a source of income if you are at retirement age. Okay, so I'm gonna, if you are not into that and you're not near retirement, you have 10, 20, 30 days before retirement, look at this. You are making money routinely, 7%. That's more than what you would get with a CD, except that this is 2 years since we started this, so it's not exactly. But I fully expect that this number will be much larger in the future as the market goes higher. Okay, that's all for today. Thank you very much for joining me. See you next time. Bye-bye.